Welcome back to another video. Apologies, I know it's been a while since the last one. I've been really busy with the different sort of project I had going on in the background. And then I think I got the flu right now as well from one of my buddies. So if there's any cuts in the video, it's likely because I'm sneezing, sniffling, or I'm foggy headed, so I just lost my train of thought. But I'll still try and go ahead and get this lecture out for you guys. So today we're going to be talking about continuations in market maker models. So first, I'll just draw the general market maker model schematic. Say it's something like this, right? So one thing you have to understand about market maker models before we dive into anything else is that they are fractal in nature, right? And they're fractal because whenever you think of what a market maker model is, in essence, it is the price pattern schematic, whatever you want to call it, that it uses to engineer liquidity as well as take liquidity. In price continuously, it's going to be going from a buy model to sell, into a buy, to sell, to a buy, to a sell, just market maker models all over the place, constantly 24/7. So a little example of that would be, let's say if I have a market maker model right here, no matter the time frame, it's going to be a fractal logic. But what I can have is an original consolidation, let's say place right here, traded higher. Then right here began to show signs of a reversal, right? So if we're just paying attention to right here, what we can see is we have an original consolidation with sell side. And then right here, the original consolidation of this sell model right here is actually just the right side of the curve going into distribution of this sell model right here. Right. So price is going to always continuously be going back and forth in the needs of market maker models from any time frame. Now, just to understand how fractal it is, then every retracement during an expansion of a market maker model is also going to have a smaller market maker model fin. That's going to be on both sides of the curve, right? So let's say we have our SMR right here, meaning that we now have our, of course, right side of the curve and our left side of the curve. Well, right here, it's going to be a form of bearish expansion, retracement, expansion. So in this instance right here, as well as right here, this is going to be a fractal market maker sell model taking place, right? What we're going to see is the low that was produced before we actually retraced higher. It's going to be our original consolidation. This is going to be the SMR of the mini market maker model. And then of course we distribute lower from there. Okay. So what we need to understand about confirming SMRs now, because market maker models are fractal, is that an SMR is going to be confirmed whenever we trade into some form of a POI, right? And then we have a time cycle purge and revert. I'm a very big proponent of time cycle logic, and I use it every single day, every single trade, for every single analysis. So I'm going to be explaining it through the lens of time cycles. But essentially, a time cycle is going to hold the same sort of logic as market maker models, where they are fractal all throughout. They're also used by IPTA to engineer and take liquidity, just like market maker models. And if you think back to just a purge and revert schematic with time cycles, right, so it's going to be the same exact thing as market maker models in terms of AMD, right? So in this example right here, what we'd see is a previous cycle high, it established. Next cycle opens up, takes out the low. Then from here, what we would expect, like let's say the second cycle opened up, dropped lower, formed the SMR, and then was rejecting the low of the first cycle, aka purging and beginning to revert. Then what we'd expect from the SMR going forward is price to be distributing either during the second cycle or going into the third, distributing to the previous cycle high. Now, what you can see is if we're to just draw a market maker model in here, it's going to be the exact same framework where you're going to see AMD taking place instead of with a market maker model specifically. It's going to be with time cycles. What we have to realize is that they are two ways of viewing the exact same thing that is happening, right? Whenever we move this down, it's always just going to be market maker models and time cycles in alignment. So what I'm looking for essentially, whenever I am looking for an SMR to be forming, is I want to see some form of a purge and revert taking place with my time cycles. for my SMR to be in place, right? So a good example would be like, let's say this is going to be our POI, this box right here. So let's see, we could just say that this is going to be a BISI, right? So let's just say for context, we are now continuing higher, let's say on a higher time frame, then we are expanding, retracement and expanding. And then we could say that this retracement on a higher time frame is this market maker model that we're trading right here, right? So if these are going to be the two same pieces of price action, but from a different time frame, we could say that we have a BISI that is occurring right here. This is going to be our POI, which is going to be annotated by this BISI right here. So that's just a little bit of context for you guys. But let's just say that we have our POI established. Then before we trade into it, and as we're trading into it, what I want to see again is some form of a purge and revert to send price higher. That's going to be for market maker models as a whole, because both market maker models as well as time cycles are fractal. This can apply for intraday, it's going to apply for swing trading, position trading, intraday trading, whatever you want to, just anything, any trading style. But what I always want to see is some form of a time cycle purge and revert taking place, right? So to where we have one cycle being the previous cycle, set a range, usually above a POI if I'm going to be bullish, because what I want to see is the next cycle open, manipulate into the POI, and then from there begin distribution higher. Because again, what we're seeing is we are purging the low of the previous cycle. And now from here, what we want to see is price reverts to the high of the previous cycle, aka and also known as the original consolidation. Okay, so going back to what we started with is the logic. You have to understand that when it comes to market maker models as well as time cycles, they're fractal. Now, how this might look in an actual market maker model is having a retracement right here, which is going to be a lower time frame buy model. This being the original consolidation, this being the SMR right here. And every single retracement during the expansion before the DOL is met, this being the DOL, of course, is going to offer another buying opportunity and be a lower time frame market maker buy model. So because what we're looking for is some form of a time cycle purge and revert, whenever we're looking for market maker models, then it's going to be the same logic for these retracements. So this is going to be a continuation method I personally like to use intraday. But essentially what I look for, typically to frame my market maker model for the day, what I expect the day to do for its delivery, is look at the session time cycles. So a quick example would be like if we had Asia set initial range overnight, let's say that I see an hourly BISI right here that I want price to trade into before we trade higher. What I might see is Asia set a range, London open, form the SMR. Let's just say there's SMT right here because we need SMT to conform the SMR. And then we have a purge and revert taking place, purging Asia low going to Asia high from here. So because I have the time cycle purge and revert in place, I've traded into a POI, being the BISI in this example, and I have SMT, which is going to function as a confirmation that the SMR is in. Then now I am ready to start looking for continuations, assuming that I missed the SMR itself. And just a little bit of clarification, this SMT right here is only going to be confirmed whenever we experience CSD, because let's say if I were to draw the right side, the left side of the curve, without what I could see is SMT right here, just like I drew up there with the blue line. SMT, right, we could see is we trade up higher, small retracement, and then immediately drop lower. Now, in this case would be because we didn't have CSD confirmed. This is going to occur every single time we trade into a POI. You want to see SMT signaling a reversal is likely to form soon. Then you want to see CSD confirming the reversal is in, which is also going to validate this SMT. Okay. So just a little bit of a recap for an SMR. We want to see a purge and revert with time cycles, price trade into a POI of some sort, along with SMT and CSD. Okay. Now going into the actual fractal market maker models. Let's just say that again, this was our sessions. So we could say this is Asia, this is London. Now the cycle I'm going to draw here would be New York. So before we even get to this retracement leg right here, and let's just quickly define out the sessions. I'll draw it over. Again, this will be Asia. This is going to be London, purging Asia low, reverting to Asia high. So before we even actually start New York, what we can anticipate is New York is going to have the delivery function of continuing distribution because the SMRs in down here in the original consolidation has not yet been met. Now, that doesn't mean that every single time cycle and price is going to just spool directly towards without any sort of retracement, but it just does mean that for this entire session, you would expect the delivery as a whole to have the purpose of trading higher. Now, this could be displayed in many different ways with the lower time cycles, but that's where these opportunities are going to come from, where what we could see is maybe if this entire block right here is going to be the New York AM session, it's going to be made up of 3 90-minute sessions. Let's just say we see something like this forming, where we have the first 90-minute cycle, second, and then the third, finalizing the distribution. Okay. Now, where we actually go to frame this fractal market maker model, this retracement, is again, we want to be able to identify some sort of a POI. So let's just say that we have a SIBI that is on the left side of the curve right here that we have now inverted and prices are retracing into. Right, so now we have a set POI. Then what we want to see is, again, some form of a purge and revert. Now, the lowest that I recommend personally going is with 10 minutes whenever we're trading intraday like this, where we could see is the second 30-minute cycle. We could see is this second 90-minute cycle right here. Have a first 30-minute cycle and then a second 30-minute cycle. Let's just say during the second 30-minute cycle, price trades lower into the POI. And then from here, what we see is we purge the previous 30-minute cycle low, right? Because we are already in bullish order flow, our higher time narrative is staying higher to this original consolidation. We traded into a POI. We have a purge and revert. And let's say that we also have an SMT in play right here. But now we have all the signs that we need to say that we should be going higher from a narrative or higher time frame perspective, as well as everything being displayed right here with the purge and revert, SMT, and let's say CST as well, showing to us that this is going to be a fractal market maker buy model within a larger schematic of the buy model. Okay, so of course, after we trade into this POI, then as soon as we get CST, which can be confirmed through a multitude of different ways, you really just have to kind of play with it by what the price action is giving you that day. For example, if this is going to be a very clean and efficient delivery on the way down, no gaps, no retracements forming lower time frame breakers, then what you could do is just wait until we get CST by displacing above the original consolidation of this fractal market maker buy model right here. But ideally, once we trade into the POI, we'll be able to inverse some sort of a gap that formed on the left side of the curve as a form of a CST. Sometimes we'll also see a balanced price range be in play, confirming an SMR occurring right down here. But essentially, if I had to summarize the logic and break it down, we want to make sure we have our higher time frame narrative in play. We know exactly what the day is going to do, and we want to be looking for continuations before we have met the DOL. After we met the DOL, I would no longer be looking for continuations, even if there's other objectives higher. And that's not to say that price cannot reach higher objectives at this point. To me, that's why I always want to be positioned on the right side of the curve before the first target is met, because with market maker models, because they go from buy to a sell to buy to a sell, as soon as this buy model is complete, then there's a possibility that we could instantly reverse and go into a sell despite having higher targets on the higher time frame. We could say this right here is going to be buy side. And the reason for that is because a lot of the time, let's say we fail to reach the DOL, or even before we reach the DOL, what price could do is just retrace down and save this DOL for another session while engineering liquidity to be traded into later. So let's say at this point right here, we traded into a BISI that occurred right here. Then because we still have the idea, oh, we have higher prices, then we could try and take and justify this trade. But of course, since the original consolidation has been met, that anything in this range from the original consolidation to your final target is going to become far less likely to be hit. So as far as where you want to position yourself in a market maker model, anything is fine as long as it's before the original consolidation. And then as a means of management, I always take a partial, usually 50% or more at the original consolidation. And then if you think that we're going to go to a final target, you can always just trail and manage our stop accordingly. with some runners, but that is how you want to generally manage and position yourself in these trades with these continuation scenarios. Okay, I'm going to head and wipe the chart. The previous scenario was how you want to position yourself using time cycles. I guess a little bit of clarification that usually happens is for which time cycles you're going to be looking for purge and reverting. Whenever we're playing out the right side of the curve during a daily distribution is usually 10-minute cycles. So let's say that we have an hourly BISI right here. We trade it higher. Now we are going to trade lower into the POI, right? Then what we want to see typically is a 10-minute cycle, purge and revert, especially if you know that the session or the 90-minute or the 30-minute cycle that we're currently trading in is in the process of distributing higher. Then whenever we see these 10-minute cycles have a purge and revert in play along with SMT, then that right there is how we would know that we are going to trade higher, because again, higher time frame market maker model is saying that we are bullish, but we're expanding, what we're expecting for right here. It's just a form of expansion, retracement expansion on the right side of the curve of a market maker model. And again, whenever we have a purge and revert in play, trading into a POI with SMT being validated by a form of CSD, and that's whenever we can position ourselves into a trade. But the other lens of looking at it, I always recommend combining both, but it's going to be using balanced price ranges. So if you guys are unfamiliar with balanced price ranges, I threw out a pretty easy guide for them in the previous video, which I recommend you guys go watch if you already haven't. But essentially, other than just purge and reverts, a way to anticipate where price is going to retrace and also find support, it's going to be using balanced price ranges, where we can project the previous side or the left side of the curve to the right side, which typically looks something along the lines of this, where let's say that we have a CIVI, for example, is left unfilled, unbalanced on the left side of the curve. We can go to the right side, and let's say that there was now a BISI right here that occurred. Right, so what we have is in this price level right here, one time of sell side, one time of buy side. And of course, this has to be within the context of a market maker model and all the higher time frame framework, right? That's the market confirmed out right here. Let's say our DOL is right here, of course, and we could say that our objective hasn't been met yet at this point in time right here, because this is what we're looking at. So what we can see is we trade into a balanced price range after displacing through it. Because this range is balanced, the SMR is in, we are continuing to higher, playing out the right side of the curve. We can expect this price range right here, because it's balanced, to hold as a support. So once it's balanced, price should have no reason to trade lower from here. But just because we trade into a balanced price range does not mean we automatically just start entering and looking for price to expand away. We still want to see our confirmations with SMT and CSD. But now where things get really powerful is whenever you can combine these balanced price ranges along with the prior method of looking for purge and reverts. Now, I only trade market maker models with purge and reverts, so I would not necessarily call balanced price ranges an equally accurate version of finding where we can frame market maker models during continuations. It's more of just another form of a confluence, to where whenever you have everything aligned, then it is very high probability. Now, I'm actually going to go into some chart examples and show you guys what it looks like, as well as break down a trade I took today using this logic real quickly. All right, so first I'm going to start on the daily chart, because it's going to provide context for the trade that I took today. But let me fix that real quick. But what we're going to see is whenever we mark the previous cycle's high and low on the daily chart, aka previous day high and low, what we see is whenever we open the day during Asia, we take the previous day's high, that being this high right here. So from here, what I'm going to do is monitor how our lower cycles are reacting above the previous day high. Now, what I'm looking for specifically right here is a form of a purge and revert to the downside. And obviously we do get that, because once we finish looking at the daily time cycles and we want to drop down one lower, do an analysis off of those, which of course is going to be the session. What we see is, if I just clear out this line real quick, we have Asia initially establish a range, and Asia is always going to be the one that took out the previous day high right here. And we see is London from there is going to take out the high of Asia. Very significant. All right, so the Asia high has been taken out right here. So moving forward into New York session, where I'm expecting is to revert to the Asia low, because again, this is all just AMD, perfect revert, a market maker sell model occurring right here. Now, where this becomes very interesting is whenever we go back and look at the daily highs and lows that were taken, then not only is this a purge and revert on the Asia high, go to Asia low, but it's also looking like it's going to be a purge and revert on the previous day high, right? Going to be right here, going to the previous day low. So I was keeping in mind the daily time cycles as well as the sessions going into the day to figure out where I wanted to position myself in a trade and when. So what we're going to see is market opened and price was instantly on ES and YM doing exact opposite of NQ. On ES and YM, price opened and then began trading higher, which eventually, of course, both indices began rolling over. Whenever the market opens out of sync like that, then I like to back away from the session. It instantly becomes very low probability to me. But what we see is for the session purge and revert taking place, then of course Asia low was met very early on, right after market open on NQ. So because I was already out for the AM session, then I was just watching price play out and see what might happen next. Now, something to understand is whenever we have a higher time frame objective to be met, usually in the form of a previous cycle high and low on a higher cycle that is not met in the AM session, you can expect the PM session to continue distributing towards that DOL. So, of course, because the purge and revert with the sessions, the objective was met. Now I'm going up a time cycle to look at the daily chart because that low had not yet been met. Okay. So whenever I'm saying that I'm staying out of the AM session, then that means, of course, I'm going back on the charts to look for entry opportunities and how price might react during the PM session. So what we'll do is drop down to the 1 minute chart. Of course, the PM session started right here. Okay. Now, whenever we look at the PM session right here, I just want you guys to look for a second and see if you can spot any sort of a balanced price range that would send us lower. All right. I think that was enough time. And if not, go back and pause it real quick. All right. But we're just going to get into it. So what we see is with this last 90-minute cycle of the AM session, we have a balanced price range form right here. Literally just right here. So if I go to right here real quickly, then what we'll see is right here we have a POI and we have our higher time frame objective narrative to trade lower. Now, from a market maker model standpoint, this is going to be an interesting one because it's almost trading a retracement within a retracement. Because on the higher time frame, right, what we see is the market maker model, of course, set an original consolidation that trails the trend higher, having a very slow SMR at the top, followed by a quick expansion to the downside. And what we see is this retracement is going to be this piece of price action right here, but price trades higher, retraces, then begins to trade lower. And then going into the PM session, what we see is price retraces into this retracement. Now, this retracement right here is going to be the final 90-minute cycle with screen box of the AM session. So we're seeing is a retracement into the retracement. And then we're expecting price to distribute lower from here. Now, going back to the two examples on how you want to be able to frame your continuation trades with balanced price ranges as well as time cycles, then what I want to see in both this retracement and this retracement to show me that these are going to be fractal market maker models is some form of a purge and revert with SMT, CST to signify a reversal, but as well as us trading into a POI with that being a balanced price range. So I'm just going to remove this real quick. But whenever we actually drop down, then of course, again, what we saw here was a balanced price range. Now, if you watch my balanced price range video, then you know that this is going to be a Zeusy market structure shift taught to me by Frank. So what we see is we have this BISI, which is rebalanced both right here, but I'm paying attention to this low right here. And what we see is civvies form directly through this low. Okay. So what I'm paying attention to now is how is this sequence of civvies going to hold price and how is it going to interact with the price when the price actually trades up into it. So whenever we just look at the 30-minute cycle right here. And again, what I'm wanting to see is just some form of a purge and revert to send us lower. So when I'm looking right here, then I'm seeing, okay, the first 10-minute cycle can be annotated with this high right here, as well as this low right here. The next cycle opens up, and so far the previous cycle highs and lows are intact. The third 10-minute cycle opens up right here, taking out the liquidity, the sell side in both of these cycles, and begins to trail higher. But again, so far right here, I'm not having any sort of purge and revert in play. But note that I don't have to have a purge and revert immediately, because I already know what I'm anticipating for the entire PM session to do, which is going to be to distribute towards the downside, towards the previous day low. So what I'm just looking for is some way of the smaller cycles within the PM session to also communicate to me that we're going to be trading lower. Okay. Now from here, if I display price out, what I see is price is respecting this balanced price range and begin to trade lower. Now, at this moment in time right here, I obviously do not have a purge revert taking place within the POI. What we see is price trades into the POI and begins to trade away. Now, for me, even though we have forms of SMT in the POI, it's not enough because I want to see purge and revert to send us lower still. So what we actually get is the first 10-minute cycle, the next 30-minute cycle opens, consolidates, next one immediately opens high, forming an SMT, right? And then from there we begin to roll over. Now, I don't know if any of you guys follow my Twitter. I'm sure some of you are actually from my Twitter looking at this video, but I took a short on this day. It was in this candle right here in anticipation of going to reach the previous day low right here. And again, the trade framework is going to be that we are already distributing on the right side of the curve, like so, expansion, retracement, expansion. And I'm anticipating the entire New York PM section to just be distributing towards the objective that has not yet been met, which is going to be the previous day low. So even though we traded into this POI right here, and we didn't have a purge and revert directly in this POI, because we were respecting this range as a balanced price range, and from here we formed a purge and revert to send us lower, that in my eyes justified an entry. Especially if you pay attention to the cycle open, this key level right here. If we were to make it a little bit more clear and just drag it out, what we see is this is exactly where price begins to find resistance, which is also in itself a POI, but we'll save that for another video. But yeah, of course, we see the 10-minute cycle, first accumulate, second one opens, immediately runs higher, forms SMT, aka purging this 10-minute cycle high. So we should be reverting to this 10-minute cycle low. And now you may be thinking, well, if we're going to always be practicing taking partials at an original consolidation, then wouldn't this be an original consolidation right here to take partials off of? Yes, but it is not as practical whenever you're trading a retracement entry like this, right? So what we want to see during continuation is taking partials at logical levels, but we want to be aiming for our final draw on liquidity. So in this example right here, since my draw on liquidity was down here, and the price action distance from right here to right here is small enough to where you wouldn't even really want to take a trade. It would just be a scalp at that point. I just want to be practical to take it. And especially because we have the narratives of, we have a higher time frame market maker model playing out. Let's just draw it out real quick, but a sell model that looks like so. Because we're expecting to reach the final DOL of the larger market maker model, we're expecting this fractal sell model right here to be just a retracement before another expansion. Then you just stretch our target to, again, the original consolidation of the higher market maker model, because this is our higher time frame narrative, and we know that this is where price should be going. Okay, so just a little bit of a recap right here. What I was looking for, again, was a form of a balanced price range, that being this SIBI right here. And after trading into the POI, I want to see some form of a purge and revert in play to send us lower. Now, right afterwards, the price begins to just grind and chop all the way down. And if you guys want me to just mark out the previous day low real quick, it was going to be right here. So if you've ever seen the end of the delivery for the session, then we actually did not yet reach it. Right. So the way that you want to go about managing trades like this is whenever we don't hit our final DUL, what we should still be doing managing our trade on the right side of the curve is going to be trailing our stop aggressively, looking for invalidation levels. Now, if you guys want me to make a video on invalidation levels, then I can definitely do that. Maybe I'll do that anyways, but if you guys really want it, then just let me know in the comments. But whenever we fail to reach our DOL and we're using invalidation levels, like I was in this example right here, and even as price is trading lower and lower and lower, and we fail to meet the DOL, as long as we're trailing price, our stop, to logical invalidation levels, which are usually going to be in the form of retracements with SMT and CSD. And even whenever we pop back higher, as long as we have an invalidation level in play, then we are still getting profit from the trade, even though we did not hit our final take profit, right? All right, I'm going to go and find some more examples for you guys real quick on just how to trade continuation as a whole. All right, this is going to be last Thursday's price action where we have a perfect example of this. So what we're going to see is our larger market maker model using the sessions for the morning is going to be this right here. Now, what you notice is we didn't take the high of the Asia session right here on S&T, but all right, so what we see here is, again, we take the high of the Asia session, not on NQ, but we do on YM, which we see right here. We have this SMT, and whenever it is met on YM, the NASDAQ no longer has to meet the Asia high before we could begin rolling over. So what I'm seeing in my head is Asia sets the initial range, London opens and begins to purge the Asia high. We obviously reject the Asia high with SMT, and then we begin to roll over. So going into the AM session right here, what I'm looking for and expecting is just the entire AM session's function just to be to at least distribute to the low of Asia shown right here. Okay, so during profiles like this, what I'm looking for specifically, whenever I'm already expecting the AM session to be distributing, if the SMR is already in, so I'm looking for, again, some form of a retracement into a balanced price range with a form of a lower Persian revert, SMT, CSD, and then just take the trade. So what I'll do is I'll bring the bar back to right here. Okay, so what we see is we have the market open up right here. Let me just start the bar back a little bit, actually. But we have the market obviously open up at 9:30, same time it always does. Price opens, runs higher into what? Into the BPR, right? Notice how precise it is, basically to the tick. All right, so price opens, runs higher into a BPR. Notice on NQ we did not purge a previous cycle low. Notice on NQ we did not take a previous cycle high. Of course, this is a 10-minute cycle high right here, but because we are in a new 30-minute cycle, what I want to see is the previous 30-minute cycle highs and lows to reference for Persian revert specifically. So, of course, NQ didn't take the previous 30-minute cycle high, but YM did right here. So this fits all of my criteria where I'm seeing a Persian revert take place. We're trading into a balanced price range. And then, of course, we have SMT right here. So as this is happening, what I'm looking at is the lower time frames looking for some form of a CSD to take place. What we see right here is on the 10-second, we invert this gap right here. All right, so whenever you have some form of CSD to confirm the SMT that is taking place, that is whenever you can anticipate a trade to unfold. But again, this is just how you want it to be able to frame continuation trades. And if I want me to just recap real quick as a whole and just give you a straight list, that'll be pretty easy here, right? We want to have our higher time frame market maker model. We want to know what it's doing. Then from there, we want to look for a POI or an area for price to retrace into. And as we are retracing into that area, this one right here is going to be optional, but we want to be able to see a BPR, balanced price range. This is going to be in the ideal scenario because then we have multiple confirmations that price should stop at a level which is going to be, of course, our SMT and CST, but also balanced price range theory, also supporting that same idea. So higher time frame market maker model, going to trade into a POI, BPR ideally, but if not, then from there we would proceed anyways with a small time cycle purge and revert. Okay, then how do we want to see a confirmation that this purge and revert is going to be an SMR on a lower market maker model? Is we want to see SMT confirmed to us with CSD. Now I'm going to go ahead and just show you guys one more example just to really illustrate the point and not actually frame all this stuff. Then we will conclude the video. All right, here we are for our final example in the charts. And of course, we always want to frame our market maker models from the higher time frame so we know where we are on the lower time frames in regards to the market maker model. So what we're going to see right here is this right here is actually a bank holiday. So if you pay attention to the time cycle, it's where we're closing. We go straight from the PMA into the Asia session right here. Again, this was because it was a bank holiday. So what we're going to do is look at this day right here as just 1 day's worth of highs and lows. Notice how we go straight from Friday into Tuesday rather than Friday into Monday, because again, both of these days are going to be condensed into one daily candle. So what we'll do is we'll mark out the previous day's highs and lows. Now going into Wednesday, what I'm expecting is some form of a reaction or liquidity seeking for the previous day high and low, because it's actually 2 days worth of liquidity of buy side as well as sell side. So what we see right here is, of course, Asia sets an initial range on Wednesday. We see London open, immediately drop lower with forms of SMT, right? Now, if I was looking just at the session time cycles and not paying attention to the higher time frame context, then as we're trading below Asia, I'm going to be thinking, okay, well, where are our signs of a reversal to confirm to me that we're going to go higher? And now, of course, I could see SMT taking place, but without a higher time frame narrative, then this could be, to me, just setting up a retracement before expanding lower from there. So it's always important to know what your higher time cycles are doing and why the liquidity is engineered. But of course, we take the previous day low right here with London. We are having SMT take place right here, as well as CSD occurring. So now what we could see is, as we're going into first of all, the 1 minute chart, we're going into the New York morning session because we have this SMT taking place right here after taking the low of London, and we are beginning to roll over to the upside. Then before market open, right about here, I'm expecting price to continue up towards the London high, because of course we just purged the London low down here, but also the Asia high, which is still intact. All right. So what I'm doing and what I'm expecting is going to be, again, the same type of profile, same type of explanation, where whenever I'm expecting the AM session to just be distributing and trending because the SMR was put in prior to market open, whether during London or just during the AM session during pre-market, put in, right? So what I want to see is the market open, and then I want to see us immediately drop down into some form of a BPR, or if there's no BPR available, then just still have a purge and revert logic in play. So what I'll do is I'll drop down to the lower time frame right here, and we'll see just that. So this time it's without the perfectly clean, amazing formation of a BPR taking place. But what we can see is the market sets a 10-minute cycle range. The next 10-minute cycle opens up at 9:40. And what do we see? This is going to be the opening price right here. We open, immediately drop down, taking out the low of the previous 10-minute cycle while having SMT present, right? So from here, in terms of a fractal market maker model, right, so what we're seeing again is, let's say that we have a buy model, which we do, higher time frame, we form the SMR. Now we are already distributing on the right side of the curve right here, right? So what we see is expansion, retracement, and then we're expecting expansion to meet our UL, which we could say is Asia high or not yet met in this example. So this retracement right here is going to be the same as this retracement right here. And again, I know this is basically going to get repetitive at this point, but I really just want to drill it into your guys' minds. What we want to see is some form of a smaller time cycle purge and revert to send that's higher. So we trade into a POI, which would be this BISI right here for support on price. And whenever we're in a POI, we don't automatically assume that it's going to function as support or resistance. We want to see our confirmation. Our confirmation is going to be SMT and CSD along with a smaller time cycle purge and revert. Now from here on out, if we go and look at our higher time frame draws liquidity, again, what we're going to see is we had the Asia high already taken right here before market even opened. But because we have our higher time frame idea, which is going to be we just took out the previous day low, we're now expecting price to revert to the previous day high, which again, remember, because it's 2 candles, it is going to include the Monday high, which if you also look at this huge new week opening gap from whenever we had Greenland news, then of course, price would want to seek this gap right here and rebalance it, right? So in the context of this retracement trade right here specifically, what we could expect to see is we enter, let's say right here, we have our stop here. This is again an SMR of a smaller market maker buy model. And then we could target this as a form of an original consolidation. Then from there, we could trade it all the way up to a new week opening gap or the previous day. All right, I hope you guys enjoyed today's video. I'm looking at the time and how long it took to record this, and on my screen right here, I'm seeing about 50 minutes. So hopefully by the time this is edited for you guys, it's a little bit shorter than that. If not, then I hope that it was still able to provide some good value. And again, I'll just go through a quick little recap of what we're looking for with market maker models. So when I have our higher time frame market maker model playing out, and the continuation is going to be very good for whenever we have an SMR that was out of our time of interest or that we just didn't see. So let's say that if this is going to be a daily market maker model, we could assume for the purpose of example, this SMR formed during London. So going into New York, if we already know that the function of the session is just going to be distribution, then whenever we see retracements, what we want to look for is some form of a smaller time cycle purge and revert to take place within these retracements. And then what we want to see from there is a form of S&T and then CSD, saying that we are going from a sell program on a smaller time frame into a buy program. Now, where we want to see this occur is going to be some form of a POI, but most ideally a balanced price range. Okay, so if you can combine all of this with a balanced price range, you are basically going to be golden as long as you got your read on the market correctly. And there are going to be instances where there will not be a balanced price range available. Now, it would be slightly less probable than if there was a balanced price range, but that does not mean that you cannot take it. Just keep in mind that you are going to be missing something that would be a nice confirmation, but it is not necessarily required for price to form this fractal buy model and then take off. All right. But yeah, that's going to be it for today's video. I hope you guys enjoyed. If you have any requests on what you guys to see me cover next, then just drop a comment down below. Other than that, I will catch you in the next one.